we start today's market talk, you need to factor in all variables that tend to impact prices of assets that you invest or trade in. I'll amplify this. The universe of asset classes is an interconnected one, so it makes sense to understand them all. For example, in case say you are in Pidilite or invested in Pidilite, you have to look at price of crude, currency, because if the rupee weakens against dollar, the landed price of crude will still go up. It will impact the earnings of Pidilite. So adopt a broad spectrum approach and not single dimensional approach to investing. Now the market outlook. With consumption expected to revive, private capex slated to pick up, and with monsoons expected to do well this year, it is little wonder that the projections of the economy are so upbeat. Now, in the State of Economy report in June, RBI expects GDP growth at 7.6% and CPI at 4.4% in FY25. Construction sector is expected to do well, fueled by infra development in form of road networks and metro connectivity. Rise in export-linked scheme has led to greater participation in global value chains. Global capability centers called GCCs have evolved as hubs of innovation and high value activities, and this is what I was telling about, that the services exports along with IT has helped in taking care of the high prices of crude in this country. With strong growth, there is no hurry as such for RBI to cut rates. But the second half of FY25 could bring rate cuts from RBI and could lead to lower bond yields. Now, the important thing to be seen in the budget is that is the fiscal prudence is likely to continue or not. And RBI, in case it continues, RBI would cut rates from third quarter onwards, and bond markets could see a bullish phase with 10-year yield easing further to 6.75 in second half of the year. Now, coming to certain sectors, this is important to understand. Now, Accenture's management alluded to no incremental deterioration in the demand environment, although discretionary spending is yet to come back, and orders are driven by large-scale transformation projects. So, what they said is that there is no incremental deterioration in demand. And if you have noticed, Indian IT index has outperformed Nifty in the last 1 month. Demand slowdown is bottoming out and discretionary spending is coming back. Be selective with companies that can navigate the tech disruption in this environment. Now, Nvidia's relentless rally has propelled the semiconductor giant's market capitalization over its megacap technology peers, helping it clinch the title of the world's most valuable company as the artificial intelligence wave continues. Now, the what has happened is Nvidia on Tuesday went up 3.5%, taking market cap of 3.3 trillion and taking it above Microsoft and Apple. Their GPU chips are in essence the new gold or oil in the technology sector as more enterprises and consumers head towards this path. Now, the other important event which is likely to happen is Hyundai Motors India Private Limited recently filed draft red herring prospectus indicating that they will do an offer for sale of 17.5% of its parent promoter shareholding in the Indian entity totaling 25,000 crore. So it has a strong market share in compact utility vehicles and electric vehicles. Listing will unlock value in the Indian entity because this is just an OFS. Uh, Approximately, they did 60,000 crore of net sales and 4,654 crores of profit after tax in FY23. So EPS of FY23 was around 58 rupees. And as you have noticed, Maruti is losing market share while others are gaining market share because the demand from the people of this country is now moving from low cost cars to cars where there are much more features and better driving comforts and all those other issues. Hence, this should list well. I think this should this should easily list at around 2000 whenever the IPO comes. Now, another issue which is bugging a lot of people is that defense stocks have had a sharp run after election. So people are worried what to do with them. Valuations are looking stretched. Defense minister announced that the military export targets from 16,000 crore would be 50,000 crore in the next 5 years. That led to this rally. In addition, Motilal Oswal launched a defense sector fund to capture this opportunity. India has a big cost advantage. Like, for example, a BrahMos cruise missile cost around $4.85 million, whereas a comparable hypersonic missile from other countries cost three times. So that is why there is a advantage for our defense capabilities, and every day you will see the orders are coming in. So I don't think the it may not shoot up that much, but it will not fall also in a big way. So now this is the bond yields. The bond yields declined to 6.97. So they are on a downward path. So that's what I was talking about. That the all the as the yields go down, the bond prices go up. Hence, it helps the people who are invested in debt instruments and gilt funds. This is US 10-year yield. Now, what happened in US is that they are still not very clear whether there are going to be one rate cut or two rate cuts. So the price will keep moving, but this 10-year yield is at the 50 EMA. Hence, it has to break above this. So the trend which was going down went up, and now again the trend is going down. So we have to watch this space. Now, what has happened is because the euro has declined because of the quick elections which have been ordered in France, where I think people are trying to cut back on the austerity measures of the present government, the other people who are in opposition. Hence, the euro declined and the dollar went up, which led to even decline in rupee also. So if the dollar has strengthened, what it has impact is that the gold and commodities will decline. So this is what we are seeing. Now the Brent crude is likely to go up, and the easiest trade now is to trade the all the companies which are producing oil, because the hurricane seasons generally starts around June, July and goes on till August, September. So the oil prices will not come down and they'll keep going up. Hence, that's a very simple trade, and that is the reason why the oil prices are crude prices are going up. This is the Brent crude prices. Uh, Now, gold, as I said, it declined because the dollar was up, but it is still at these elevated levels while the 20 EMA is still reaching there. So that has to be seen. And if you see the RSI is or the momentum indicator is declining. Nasdaq, if you see here, it led by Nvidia, it made a fresh high, and even the momentum is good. While S&P 500 surpassed 5,500 for the first time ever. So things are looking good, and the economy is strong. Now, I'll just have a word about copper. These are the copper financial futures. They declined once they have made a top, and then they have come to around 4.54. And if you see the copper contract, which is trades at MCX also, the contract size is 2,500 and there is no delivery. Hence, you have to, if you are long, you have to just keep rolling over. So the cost is so high that nobody is going to trade copper. Hence, once I had covered MCX, I had shown that copper was not being traded, and more of trading was of Hindustan Copper. Now, after some time, prices cannot be sustained beyond a level. Now, India VIX, this is a daily chart. It had gone to around 30 odd level and then has been declining regularly. This is a daily chart. So right now it is at that 12 and 13 range, but the volatility has reduced. So it is now taking support in these areas. So it may show some declines maybe after budget, once the things are stabilized. Till budget, it will just keep remaining slightly volatile. Now, coming to Nifty, Now, if you see, I'll cover this thing in slightly more detail. Now, if you see Nifty, it made a fresh high, but then it sold off. While Bank Nifty performed well last week. So, and if you see the daily chart, uh, every day we have had a higher high, and then it declines and sells off, but it is not selling off in a major way. Now, and then coming to, if you see, sorry, Nifty Bank, uh, this has Nifty Bank in last week has gone above the election week high. So it is showing good momentum. And if you see the daily chart, last 4 days they were trading. So 3 days it was up, went and nearly touched 52,000, and then has declined after that. This has made a hammer. So it is looking from here. It is looking indecisive. So we'll have to see what happens after there. Uh, so basically, if you see, beyond this 3 days of drive of 5th, 6th, and 7th, post June 4th fall, the uh, market has been actually been range bound. Uh, a lot of people showed decisiveness at the bottom, and the buying came here from the lows. But after that, that decisiveness has vanished as prices have swiftly moved to levels where they are not very attractive. So people are not finding it very attractive to buy now. Key element, though it is not falling also and it's trading above the 20 EMA, it is because there is no selling also. So there is lack of selling and slight amount of profit taking and sector rotation. Sector rotation, if you have seen now, last week banks moved, IT moved, chemicals moved. So there is a sector rotation which is taking place. Now the next set of triggers will come from budget and June quarter results. So I think till budget and June quarter results, which will come in second or the third week of July onwards, we will see the similar kind of positioning in the markets. Uh, Weekly charts, as I have shown you, of if you see the weekly chart of Nifty, it shows, and Bank Nifty also, it shows that the trend is strong and positive. So the dips are getting bought, are becoming buying opportunities, the major dip. Retail is active and FIs are coming back. They are buying now. In June, they have net bought around 19,000 odd crore. They have covered their shorts and they are now net long. But the reverse is that the smart Indian money, the client index positions, which were trapped in longs on June 4th, have liquidated and now are moving on the other side towards short now. But the interesting part is that the FI money is not coming in normal buying, it is coming through bulk deals. So the impact is that the supply paradigm of the market is changing. Promoters are the new suppliers of equity, and institutional investors are grabbing whenever the stocks are offered by promoters at of good companies at little bit of discount. And that is what we should do. We should look at similar opportunities. SIPs, funds with PMS oblique AIFs act as a big cushion during dips and result in big buying when a bottom is sensed. So the net impact is that don't take aggressive long trades or take quick profits or take very quick profits if you are trading. So this, in my view, is the essence which I have seen. Now, this was the daily chart I have covered. Now, if you see here, the hourly chart on 18th, gap up, and then we sold off. 19th, again, gap up. Immediately, there is a sell off, and then it remains sideways throughout the day and then declines. Then 20th, again, there was a gap up, sideways, 21st gap up, and then decline and then sideways. So the trend is very clearly visible, but till the time it is above the 50 EMA in short term, that is 23,434, the trend is strong right now in short term. Same thing in Bank Nifty. It is, if you see overall, the trend is positive. The daily chart, so if you see, it is nearing that, and it has to cross this level of 52,000 now for further strength, which I think is imminent. Now, last week the strength in Bank Nifty and Nifty also was came because of HDFC Bank. Now, if you see here, this was the gap which was formed in January. So what HDFC Bank did was it crossed this gap, and now it is trading above this gap. And till the time it is trading above this gap, it will remain strong. So this 1650 level should provide good support. Until the time it is trading above this level, don't go short on HDFC Bank. And the first set of targets should be around these levels of 1675, 1700, and then it's high of 1750 odd. So let's see. Reliance, if you see here, the other thing, Reliance is getting stuck in this supply zone. So it requires a trigger to cross this supply zone of 2950 to 3030, where it has been for the last full year now. It is stuck in this range, goes there, comes back, takes support at its moving averages, and goes back up. So this is what is Reliance doing. The stock which was in momentum was Adani Ports last week. The reason was because of it's been included in Sensex, plus there is a positive business updates to this. So this is the rising trend line. Once it crosses these levels, then it should test its third May high of 1600 plus. But that is some way off, but it is looking good. Now, Midcap index made a doji indecisiveness, but still it is strong. It is higher and the trend is positive. And if you see RSI also, there is some momentum. Similarly, small cap index, same kind of a candle, but trend is positive, so stay invested. It had become overbought for some time, but then it had corrected, and then now again the trend is looking positive. Now on the request on certain stocks, this is first is SBI. If SBI, if you see, it made a high around 910.20, but then it has corrected, and it is not showing any momentum as such, but it is still RSI on the weekly chart is above 70, so it is not uh, nothing is lost as such. I would be I would look at dips to closer to the 20 EMA on the weekly chart around 780 levels to go long in this stock. Till that time, it will remain in these levels because there is some kind of a doubt on the government policy with respect to welfare and other issues. PNB similar chart. It has come. It is weaker chart actually. It has declined and has come much close to its 20 EMA. So I'll look at this 20 EMA. If it breaks this, then the next support would be the 50 EMA. Same thing with LNT. If you see here, LNT has come and taken support at its 20 EMA on the weekly chart. So people are waiting and watching and to see what is the direction of the government budget and expenditure, and whether the expenditures on infrastructure and all will continue or not. Now I'll cover few stocks today. These are all pretty interesting stocks, and they're likely to do well. First is C Infosystem. It is well poised to benefit from an early leadership position in fast growth end markets, including automotive navigation, mapping devices, connected vehicles, telematics, and government digitization. What people think is that C Infosystem is primarily used by automobiles, which is incorrect. It is moving into other sectors also, which I'll show you later. It enjoys 80% market share in auto OEM navigation software. The core profit pool of the company lies in its IP protected digital mapping service built over more than 3 decades and overlaid with valuable data like demographics, law and order, natural resources, infrastructure, and other insights. Forecast of 38% FY24 to FY27 expected revenue CAGR and steady EBITDA margin in the 38% to 41% range. So there is a clear visibility of growth for 2 to 3 years at least. The emerging business segment of mobility, which is separate from autos, which includes both software solutions like mapping, uh, SaaS services, fleet management solutions, and hardware solutions like GPS trackers, dash cameras, and assisted helmets, among other offerings, has a meaningful addressable market size for MapMyIndia, which over time could be larger than the current core automotive case navigation connected autonomous shared electric business segment. Now, recurring revenue customers at MapMyIndia now include telecom operators, banks, fintechs, e-commerce, food delivery, auto companies, government tax, property departments, oil and gas companies, police departments, transportation departments, multiple other end markets. In FY24, it had close to 880 B2B business to business customers. It won a 400 crore contract for the next 5 years from Hyundai and Kia. A pickup in Hyundai and Kia sales supported by premiumization and electrification should result in accelerated revenue recognition for the company starting in second quarter FY25. Now, just for information, Hyundai had cancelled their contract, gone to somebody else, and then have reverted back to CE Infosystem or MapMyIndia because of the quality offered by them. They have a software called Map Plus Kogo. Kogo, why? Because they have acquired a company called Kogo, which helps people plan their travel and local experiences by generating expert recommendations that are bookable using proprietary AI technology, geospatial intelligence, and real time travel data. Use of drone technology from in drones investment to enrich map and DAS business. DAS is drone as a service business. Now they have acquired some stake in this company also, in drones also. It has a unique advantage of having access to a recurring stream of revenue within its automotive customers who typically pay on per vehicle per year basis for a period of 3 to 5 years from the sale of the vehicle, after which the end customer needs to decide whether to renew. So they get money every year on, so the revenue is recurring. Use of cash, they have a provision of doing a QIP so as to get some cash so that they can do an acquisition. So that will also give them opportunity. Now let's see their revenue. In FY24, this is in millions, they have done around 379 crore revenues. And this revenue is likely to become nearly 3x in FY27. So this is what is the estimate. And income, that is the profit, is also expected to become nearly 3 times, roughly around 347 crores, with a EPS in FY26 of around 48.5. So you can do multiplications here. 48.5 is expected EPS, give a PE of roughly around uh, 50, 60. So it should easily trade between 2500 to 3000. Uh, if you see the ratios, uh, the key ratio is ROE. Now, if you see the ROE is expected to go up and it is heading to around 28%, 27, 28%, which is good. They are expecting a revenue growth of around 35% plus over the next 2 3 years, EBITDA growth on similar lines, EPS growth of around 40%, and EBITDA margin of 40%. So there is a good visibility. Plus, they have already done the capex. Now, if you see here, the trigger for CI information system is they are having market share. The trigger is increase in their total addressable market. That is the trigger. So one should understand what is the trigger. So what this people have forecasted the total addressable market of MapMyIndia to increase by nearly 4x over the next 5 6 years, from $277 million to 1.1 billion. So the market size is increasing. And if you see here, so total TAM from 277 is becoming 1.1 billion, with all three, especially mobility being the highest growth, government's requirement and corporates also increasing. Expectation is that it will post 40% revenue CAGR over the next 5-6 years. So the growth will be highest in mobility, followed by government and corporate. So total TAM for Map My India is expected to be going up. Now, this is their product offerings. If you see here, NKS, video telematics, fleet management, logistics optimization, electric mobility, digital maps, SaaS, PaaS, APIs, location intelligence, geospatial analysis, geographic information system, AI, digital automation, 3D, HD, metaverse, maps, government, law and order, tax network, defense, inventory planning, disaster relief, essential services network, town city planning. Use cases are for auto and mobility are there, number of them. Then for consumer enterprise, again, number of them. And for government, like geotagging of public assets, network and route mapping, property tax mapping, etc. So big requirement for this kind of software. They are publicly known customers. If you see auto, Hyundai, Kia, MG Motors, Safe Express, Maruti, Ford, Audi, BMW, Mercedes, Mahindra and Mahindra, Skoda, Toyota, Suzuki, Honda, TVS, Harley Davidson, Yulu, Consumer and Enterprise, HDFC Bank, Bajaj Finance, PhonePe, Flipkart, Airtel, and Government, GST Network, UP Police, Ministry of Panchayati Raj, PM Gram Sadak Yojana, State Road Transport Corporation. So, big field. So, this is like a shark in the ocean right now. uh, Government business and customer estimation, local bodies, smart city, property tax, traffic and transport, solid waste, water and wastewater, city gas, urban roads and payments, state governments, central governments. So number of fields, total government departments per government have been listed. Number of states, 28. Potential target customers around 370. So it is expected to go up. And as per the population, as the populations in the city is increasing, the number of customers are also increasing. Uh, their advantage is a strong software backbone, and the business is not capital intensive, so which is supporting ROE of 28% and higher, and EPS CAGR. The advantage with it is that it owns the maps and related geospatial data, which is embedded in its hardware devices. So it is not dependent on anybody else for data or has to give some money to anybody to use their data. Uh, Book to bill ratio of new business wins. Now, if you see here, this is, you must not come, you must come take it as an IT company. So if you compare the book to bill ratio, higher, it is higher than other IT services. This is InfoEdge, LTIM, Wipro, KPIT 1.4 times, TCS 1.5, and Map My India 2.2x. Book to bill is very simple. This is how much of new contracts they have got over the revenue for the year they have already done. And open order book trends are going up. So FY24, they have around 1300 odd crores of order book. So it's looking strong. Uh, I told you they have acquired 40% of AI-based travel startup Kogo Tech Labs and integrated their platform with its Map Plus app. 20% stake in Indrone's solution, which is leading DAS, the provider and commercial grade drone manufacturer in India. This partnership will help it to offer high definition and 3D maps. Now let's see the price or the chart. This is a weekly chart. So you see, last week because of the coverage, it has just high volume. With high volume, it has broken out and has actually in this week only has really reached the target also, just very quickly. So opportunity comes very slowly in this market, and once it comes, it is grabbed very quickly. So that is what it seems so from this. Now the other one is very interesting. It's DOMS Industries. All those who have got children and the grandchildren, please speak to them, and then you will understand the business potential of DOMS, because you will just see what they are using. They are all using DOMS products. Well established competitive advantages of strong brand, differentiated products, and presence across diverse business streams. It aims to build 0. 0.6 million square feet manufacturing capacity under phase 1 of its 44-acre land parcel in March 26. It targets to increase its writing instrument, that is pens, sketch pens, highlighter, adhesive, and pencil capacity material with its addition. It has a distribution network of around 1,25,000 retailers, up from 95,000 retailers in FY20 at a CAGR of 7%. However, the revenue growth at a CAGR of 23.8% over last 4 years has outpaced the distribution network growth, so which shows that they are grabbing market share. Uh, and it is acting as a good tailwind in medium term. Strategic partnership with Fila has helped the company access global products and market along with augmenting its R&D capabilities. Sketchpen segment may drive incremental growth post capacity addition. It has a comprehensive product portfolio of greater than 4,000 SKUs across 7 broad product categories as of March 24. It has produced SKUs for pens at price point of rupees 5 to 10 for school kids. These have been well received in the market. So if you see here, uh, they have in the last year done around 1500 crores of sales, and likely to do around 2400 of crores of sales in FY26, and make a net profit from 150 crores to around 250 crores over the next 2 years. EPS is expected to be in FY26 around 40-41, sales growth of around 20% plus, EPS growth again of 20% plus. Uh, Gross margins are expected to be around 40%. EBITDA margins are 17%, which is growing. ROE is good, 24%. So things are under good control. And if you see here, they had a strong revenue growth, but it is likely to be now peter out, not become that slow, but still CAGR of revenue growth of 25% is good. EBITDA margin is improving, and it is expected to be above the mean levels. Net profit growth CAGR of 28%, and ROE, ROC is declining because they're doing some capex, but still it is good above 20%. Uh, Scholastic art material may drive the further growth for this company in FY25-26. Distribution network has a high potential for expansion. It has expanded revenue share, indicating market share gain because the revenue is growing along with the distribution. Sketch pens with anti-push technology. What anti-push technology is that the tips don't recoil while doing extensive use. So that is what it is. Neon pencils is their best selling SKUs, and still it is less than 5% of product portfolio. So there is no product concentration with it. uh, I have told you how their revenue is growing at CAGR of 25%, return ratios above 20%. So we have seen 41 rupees EPS in FY26. So at 55p, this is now somewhere around 2000. And if you see here, it has had a steady rise. It has not fallen below its 20 EMA, the daily chart, and has been having a steady rise. And it dipped in March when there was a dip in the market as well, and then dipped to 50 EMA on the 3rd and 4th June, but has recovered. So if you have a long-term horizon, this is a good stock to be accumulated on all dips. So this is a strong company and good market potential. This is the third stock today is an interesting stock, Paris Defense, because it was on steroids last week. So I just went through it. It operates in two segments: optics and optronic systems and defense engineering. Total market size for optics and optronic system is around 5,000 crore. Company expects its order book to be twice its revenue in the next few years with a visibility period of 18 months. Company expects an order book of 2,500 crore by FY28 end, which will be 60% of the total contracts rolled out. CapEx of 5 to 10 crore in FY25 and FY26 for expanding current facilities. It's exploring a partnership with Mitsubishi Japan for periscope systems. It is the only company in India manufacturing optical components for space. Hyperspectral imaging camera market has a total addressable market of 20,000 crore. I'll cover this later. Hyperspectral camera is not only used for defense; it has got other other use cases also. It expects ISRO's order to return to 60% of their total order book that had declined from 50% to 15%, and that is why the stock also declined. Now, the key issues where they are working on is flow forming tubes. It manufactures forming tubes for missiles with only two to three competitors in this subsegment. Titanium fabrication. The company is also involved in titanium fabrication and expects potential orders worth 450 crore in the EMP subsegment from submarines. A remote control border system. The company anticipates potential remote control border system orders, each costing a crore rupees. So it expects potential order of 4,000 systems worth 4,000 crore. Each submarine periscope is valued at 30 crore. Company expects to deliver six new periscopes in FY25, totaling 180 crore. The company has received two orders worth 53 crore for periscope refurbishment. It is focused on adding ESM radars to periscope systems. Each ESM radar costs 10 crore and is fully indigenized. It aims to provide periscopes that match global technology standards. Uh, Now let's see their revenue. Net sales FY24 around 253 crore, which they are expecting to take to around 421 crore. So operating profit is around 100 odd crores and EPS of around 17.6 in FY26. Sales growth is expected to improve to around 30% odd from here. Operating profits to grow 51%. That's what I said. FY24 that it dipped because the orders from ISRO reduced, and that's why the net profits also reduced. And now they're expected to go up in the next 2 years. We have to watch this. ROE, ROC are also expected to improve. Rest they are doing well. Now, if you see here, they were not moving or not doing anything over the last few days, and they were in slumber till around May, June. And I think after that, there is a brokerage report, and suddenly there is momentum, and there were the high volumes, and from 700 or 800 levels, it went up to 1500 levels in a week's time. This is a daily chart, so this is just a week's effort. 6 days, 3 and 3 6. From bottom was around 900, it went to 1500, and now it is correcting. But I would recommend that the good levels would be around this 900 920 level only to get this stock. Uh, because as I said, around 17 18 rupees is FY26 EPS, so giving it a P of around 50 odd, it should trade at around 900 odd levels. Due to indigenization, reliance on imported material has decreased, reducing material cost of 30%. Hyperspectral camera, which I spoke about, is useful for food processing, agriculture, environmental monitoring, healthcare, and mining, and mineral mapping. So they have a lot of uses because of this technology they have developed. Now, so this is what I have to cover today. I finished. We'll take questions now.